What's going on, guys? In this video I'm going to show you how I use the 3 drives to a bottom pattern, and in combination also with the day of the week that we're in. Like today is Friday, so I don't have high expectations for a follow-through on the downside. So the first thing that I do is I try to identify a 3-wave pattern that I often do, and sometimes it takes the shape of a Wyckoff pattern, other times it's a wolf wave, and in this case I would consider this a 3 drives to a bottom. So the pattern is pretty simple. So we start at a high and we make this 3 drives to a bottom pattern like this, and then I'm looking for a target here. So I don't know where to put it. I could use supports and resistances, but what I like to do is on the Friday is I like to find the opening of the day, because a lot of traders are going to try to get out of their positions. So whatever move we had for the day, starting from the open here. So this is a daily chart, so this is around where the open is. Doesn't have to be too precise, but in that general area here at 10,576 for the Nasdaq. This is where I would have an idea of where I want to get out. So whoever got short here is going to have to close out their well, doesn't have to, but most floor traders close their positions on a Friday. So the other way that I find targets is I'll do a Fibonacci retracement, and I'll try to find a level that is close to the opening of the day. So right now this is 10,563, so this is pretty conservative, and I'll lower it by a few ticks or pips here, and that would be around the area where I would want to get out. So I just got in, and I'm wanting to get out at this price here, a little bit before the retracement. So 10,560 would be my exit. So what I like to do in this pattern is to try to combine it with a bear trap. So over here you see it got a bit lower than what the line was here, and we have a tall wick over here. And this signals me that this is pretty exhausted. We've reached a potential capitulation. So I'm entering here on a retracement from this zone, and what I'm expecting is for price to go back to this area here. So this is going to be my target. So I'm going to pause the video and we'll see how it behaves throughout the day. Alright, so right now we're seeing exactly the type of behavior from the market that I like to see. What happened is that I entered on this bar, and it was retracing, and it got rejected pretty quickly, and it made a bar with a longer wick than the rest of the body. So my entry was really good here, and for my stop loss, and this is why I wanted to come back in and talk to you guys, is that I always try to keep at least a 2-to-1 target, profit target compared to my risk. And so my stop loss, it doesn't have to be all the way at the low here. If price gets back in this zone here, I already know that I'm wrong. So I try to make it a 2-for-1 plus the trading fees. So it's a 2.1 ratio of profit versus risk. So what I'm not going to add here, because this is Friday and this is like a short-term trading pattern. But if I were to add to the position, it would be on this bar. If ever it closes above that bar, then I would add again, and my average price would be somewhere in this vicinity. And I would cover, or not cover, I would place my stop loss. I would bring the stop loss to the entry level on my first position, and then I would bring my second stop loss here at the entry price of my first one. So I would have basically doubled my position, but reduced the risk at the same time. But today's Friday, and I wanna have an early weekend, so I'm not gonna do that. But I wanted to explain how I do it usually. And also, one of the subscriber asked me how I use Fibonacci levels in my trading. And this is pretty much it. I look for either a confluence of supports and resistances or an open price for the day, and then I trace my Fibonacci retracements based off of the move that I'm looking at, depending on the time frame. Like right now I'm trading on a 15-minute chart, but sometimes I look for a 4-hour chart or a weekly chart, even if I'm investing, and then I'll trace whatever I think is the relative high that's relevant to this move. And right now, since I'm trading a 3 drives to a bottom pattern, then this high here is what's relevant. If ever I want to go more on a conservative side, then I'll lower this the high. Instead of taking the highest high, I'll look at the bodies, and I'll try to put 2 bodies together like this, and this will lower my target a little bit and make it a bit more conservative, like so. But in this case, I don't think it's necessary, because the Fibonacci retracement is lower than the open of the day. And I'm fairly confident that we're going to reach this zone here first, because it's a resistance zone, and we have a lot of activity in that zone, so it's very likely that it's going to act as a magnet. The second reason is because our open is right in the middle of it, and the third reason is because we have a Fibonacci level close to that area. So I feel really confident that we're going to hit that 38.2 retracement level. And as we speak, the price is getting higher now than that previous trend line, which acted as a resistance. But right now, it looks like it's piercing through it, so we're in good shape here. So I'll check back with you guys in a second. All right, so I zoomed in a little bit. This is a 5-minute chart. So as we can see, we closed above the previous trend line, and we made a full candlestick on top of that channel here, which is a very good sign that we're going to reach our target for the day. But what I want to talk about here is another way where I can add. If ever I didn't add when the bar closed higher than that level, the second way that I add to my position is if I have the full breakthrough like we see here, and then we have a retracement that tests this trend line, which was resistant but is now support. And then I'll look for a candlestick pattern where you have wicks that are longer than the bodies, signaling that we're kind of retracing. And then I'll start entering in hopes that we go back up afterwards. I'm not going to do that now, as I explained, because it's Friday and I want to get out of my positions. But this is very easy trade setups that you can see all the time with these 3 waves pattern. This is why I wanted to show you live how I look at them. It might go right straight through, you know, it's but I think it's important to look at trading in terms of scenarios and to know in advance how you're going to react. Like for instance, I would add here if I was being a bit more aggressive. If we're not Friday, I would take a bigger position here and add. But right now, I'm just taking a light trade for the day, risking 1% and hoping to make 2. But if I were in the beginning of the week and I was feeling that this would be a bigger move, then I would be much more aggressive at the base of my trade, hoping for a longer run. But the time frame being 15 minutes or 5 minutes is doesn't warrant that for now. So I'll check back in a sec. So now what we're seeing is a fight between the bulls and the bears, and it might be creating a bull flag. But it might also be just liquidation taking over because we want to go test lower. So I don't know for sure at this point. All I know is that it's acting according to my plan. I think the trade is going well. And right now, because it reached this high here, it's really having a fight. And I'm guessing if we go on a smaller time frame, we're going to see that there's some kind of a flag trying to be drawn here like this. So this is usually a continuation pattern, but it's not uncommon for them to break down and test back a support. Oh, it just did. And test back the support to make sure that it lasts. But either way, I think this zone here would be a really good place to enter some more inside of that position. Let's go back here to the 5 minutes and erase this. So yeah, so right now it broke down, so it's not bad or anything. But what I'm going to do now is I want to protect, I want to reduce my risk as quick as possible when I'm trading. So what I'll do here is simply take my stop loss and bring it to my entry point plus the fees. So right now I'm going to be in a risk-free trade. We're coming down to test this support, it looks like. So we'll see how it plays out. All right, so it didn't go test, which is a very good sign. What it did instead is it made a flag. So we started off with a pennant, but now we made a low here and it created a flag and it just broke through it, which is also a continuation pattern, which looks really good for this trade. I could lock in some profits here, but I don't see the need for now. I think that we're gonna it's very likely at this point that we're gonna reach our target, so we'll see. Alright, so we're right into resistance right now, and there's something that I really don't like is that I'm seeing waves that are, 3 waves that are of reduced amplitudes, and this is really bad. And what I don't like is that it seems to be stalling. So if it breaks on the downside on these next few candles, I'm just gonna get out of my trade and just call it a day and start my weekend early. So oop, it's breaking. All right, I'm just gonna get out. All right, so quick trade recap here. I'm pretty happy I got out early. I got out in that zone here, and it went all the way back to where I had placed my stop loss. So I would have had a flush day basically. So I'm glad I took the profits. But what I was seeing here is this zone. We were right into resistance, and the 3 waves that I was talking about were these here. There's one here, a second here, and the third there, and each one of those, and then it led to that downside. So each one of these waves, like it started with the long one, retraced, then another one that was of shorter amplitude, and then another retracement, and then another one. And this is a loss of momentum, and it's something to be taken seriously. So combine that with the fact that we were coming into resistance, my targets seem to be wrong. So, well, they were okay, but the behavior of the market told me that it was time to cut the trade short. So I hope you enjoyed this video. This is kind of my thought process that I want to give you guys. Maybe you can learn something from that. I'm not sure. So let me know in the comments if this is the type of content that you want me to make in the future. And please don't forget to like and subscribe, and I'll see you in the next video. Take care, guys.